Hey everyone, welcome back to Fiscal Voyage. My name is Felix. In today's video, we're going to talk about a high yield dividend growth stocks that's been increasing dividends for 25 consecutive years, and they just announced a few days ago a 3.3% dividend increase. This stock is still undervalued and yielding almost 8%. Undervalued stock and has potential to go higher. So we're going to look at the fundamentals, we're going to look at the technical, and I'm going to show you that I currently own positions, and I'm going to show you where it's at and how am I doing in that current position and my plan going forward with this stock. So again, we're going to do a stock analysis on it, look at the technical and the fundamentals. If you're new to the channel, make sure to hit that subscribe button and like this video if you enjoy it, and let's get started. So this is a stock I'm going to cover in today's video. Enterprise Products Partners is the high yield dividend stock which just increases dividend by 3%. We're going to look at that shortly. The company is a midstream company which basically transports oil and natural gas to different locations. So it's the best way. So basically they charge tolls for the transportation of these commodities, oils and gas and natural gas. But you can see here it's going for $23.40. And this is the most attractive thing about this stock right here, the 8% dividend yield currently. And you can see here earnings is at $2.16, covers a dividend of $1.86. But for these type of stock in midstream, I like to look at operating cash flow, not just your adjusted earnings or diluted earnings. I like to look at operating cash flow to determine the quality and the valuation of a stock like this. As you can see here, earnings at $2.16, but we're going to cover the operating earnings. And you see the company announced in January 6th a 3% increase to 46.465 cents a share. There's a 3.3 increase, prior dividend of 45 cents. So they raised it about a penny and a half. So a lot of people, they don't increase it by a penny and a half or whatever, but they're paying almost 8%. And this was a few days ago, and the stock price has went up since then as well. And they additionally announced Enterprise purchased 125 million of common units in open market, bringing the total amount of common unit buybacks during 2021 to $200 million. So they're buying shares back of their shares at a discount. And I'll show you why I like that, because a lot of companies, when they do buyback, they buy shares of their own company at higher price and higher valuation, which doesn't go good with a lot of shareholders. I like personally when they do buybacks is when it's depressed price values, maybe 52 weeks lows, things of that nature. That's when I like to, when they announce buybacks. If the stock is too high, then just increase the dividend better, and your shareholders will be much happier. But anyway, and if we look at the history of this company, they've increased years of dividend growth, 24 years, and I think maybe 25 because they haven't updated this. So 25 years of dividend growth. You can see here the yield at 8.2. So yeah, it was this is last month. So, and right now we saw it at 8%. And you can see here the yield growth is not that great. You can see here the 5-year average is 2.5%, the 10-year average 4.1. So it's been slowing down, 1.1 last year, but they increased it very nicely at 3.3% earlier this year. And there's speculation talks that they may increase the dividend another percentage point. I'm not sure exactly how much, but later this year. So that's very exciting. I own shares of this company. We could look here, show you right here. I'm up very nicely in this here. You can see I have my average is at $13. I have 216 shares. I'm up nicely here with EPD. But anyways, you can see here in fast graph, the company, this is operating cash flow as part of the fast graph. I'm gonna actually shorten this time period because I don't like this anomaly year. It will affect the numbers. So if I shorten this, let me see, 9 years, I think 10 years. Perfect. 10 years here. You can see here the company averages around a normal P around 11.35. And right now it has a blended P price to operating cash flow of 6.34. So almost half of where it normally averages, right? So we see here, we go back to normally where it's supposed to be around the 11.4. You can see you have a 30% annual rate of return of this company, and you can see your growth could be of 53%, in just in a few years, right? And even if it just stays flat in this price range, 23 over here to $20, $25, maybe $18, you're getting almost an 8% dividend yield, which is outstanding just for sitting and holding. And this company is could pay it out. As you can see here, operating cash flow covers dividend very nicely. Even in the COVID crisis, the stock went all the way down to $14, I think to $11 almost at one point, and they didn't cut the dividend. Where all these companies were cutting dividends, decreasing dividends, or suspending dividends, this company not only continued to pay it out, but they actually raised it by 2 pennies. You can see here 2019 was at $1.76, and 2020 $1.78, and 2021 $1.81, and they continue to grow this. So you're gonna have a high yield dividend stock that continues to grow its dividend, which is outstanding. This is what dividend growth investors dream of, right? So this stock, as you can see here as well as forecasting, analysts long-term growth are expected to continue growth in operating cash flow. So that's good. So the dividend still looks to be very well covered. And if we go to Morningstar, you can see here they have a 4-star rating out of 5, which is a buy recommendation. They have a fair value price of 25 versus yesterday close of $23.27. So it's about fair value based on the Morningstar, but I think it's still undervalued. And I'll show you why. Also, we're gonna look at a technical part of this analysis shortly. And you can see it has an economic moat of wide, which is great. And some of the key things, we always gotta look at the balance sheet. Interest coverage of 4.28, which is good, and debt to equity ratio of 1.2, which is really good, especially for a high intensive, capital intensive type of industry. And another thing I like here is you see the revenue in billions. They were on a downtrend. You can see here 2018, 2019, 2020, and they were going down, from 36 billion and 32 billion and 27 billion. And right now, trailing 12 months is at 36 billion. So they're basically back in 2018 levels, which is outstanding considering 2020 was a tough year for the whole oil, natural gas industry. A lot of them were, losing revenue, cutting dividends. Oil got below $0 a barrel, right? So you had that happen in the COVID crisis. And some other things I like here, the valuation. You can see here, price to sales at 1.4, which is lower than the 5-year average. Price to earnings at 13, lower again, the 5-year average. Again, this price to earnings is based on the adjusted earnings or diluted earnings. We don't look at that, but just something to look at here, right? Price to cash flow at 6 versus 9, which is undervalued, and price to book of 2.0 versus 2.3, so it's still undervalued there. And price to forward earnings undervalued there. PEG, the higher the better, versus the 5-year average, so it's almost double of the 5-year average. So all that metrics shows you that this stock is undervalued. So this is something you guys should definitely be considering. Again, the fast graph, outstanding. History earnings or operating cash flow is expected to grow this year very nicely, around 33%. You can see here from $2.76 to $3.68. But it is coming down. They're expected to be at $3.09, but still, it covers the dividends very nicely. And if we go to the analysis scorecard, the prediction is pretty accurate. You can see here, either the company beats it in the 1-year marks or it hits it in that 10% margin of error range. So that's real good. And then in the 2-year forward, with a 20% margin of error, the company either hits it or beats it. So that's really good. So, my confidence on these estimates are very good. And if we look at the technical analysis of EPB, you can see here, this is the weekly chart. For long-term investors, this is the chart we like to look at, or the monthly. Some things to note here. There's a lot of trends, downward trends. You can see here from here to here, that's one trend line. You're basically, to create a trend line, you're just hitting the pivot points. There's a pivot here and a pivot here. The 2 pivot point creates a trend, right? You can also go this way right here. This is resisting level around $30. That every $10 seems for most stocks a resistance or support level. You know, $20, $30, $40, $50. It's that human nature of that, you know, that solid whole number, right? $10, $20, right? So right here at around $30, the stock right now is at 23.40. If the stock hits 30, I present that there is going to be a pullback, maybe back down here to 25, and then bring it higher. But anyway, so one thing that I am concerned at the current price is that we're in a wedge here, right? You can see here, this right here and this right here is creating a wedge. So the next few weeks or month, I would say the next 2 months, something's going to happen. It's going to either wedges, what it creates is like a slingshot. So it's a lot of tight action here, and then all of a sudden buyers or sellers are going to win, and all you're going to see is a spike up or spike down, determining who's going to win and what happens. And what probably is going to drive this is going to be the earnings in around February or sometime for Q4, and the company estimates for the whole full year of 2022. But if we go back to fast graph, you know, earnings or operating cash flow is expected to be lower, but still higher than 2020 and in 2019. So overall, that's real good. So this is why I like this. So right now is a good opportunity to buy shares. You can see here, it is in a downtrend. So it's possibly that the stock comes down. If we go to the daily, this tells a little different story because buyers are stepping up, and I'll show you why shortly. So if we look at the daily chart here, you can see the past 2 days, what's been happening here is, you see the red here, so it was a down day. It actually gapped up and then brought down. Okay, so sellers took over, but then it gapped up again and it brought down, but you had a bottoming tail. So seller took over, but then buyers stepped up. And then you had this bottoming tail as well, so buyers stepping up again. So I'm thinking that this stock is going to potentially break out of this, you know, hit this trend, which is the long-term trend over here, which is based off, you can see here, based off this point, pivot point, and this pivot point. So what I'm thinking is going to happen is going to break out of here and then bounce here and then come back down. So basically, you could either wait for that, right, when it comes back down again to the 23 area, or just buy it now, see what happens, right? And if it breaks this area here over $25, you know, buy more shares. But if it doesn't, you know, you didn't have a lot of shares in, you didn't go full position, and then when it comes back down here on the $20, you can see here there's good support here. You have support here, resistance now becomes support, and then you have support here as well. So this $20 range is great support area, and then you can pick up more shares from 23 down to 20, and hopefully it'll, you know, bounce back, because if not, I'm buying more shares if it goes back down to $15. And you can saw my average is around $13. But anyway, hope you guys enjoyed this video about EPD, high yield dividend growth stock that just increased its dividend. Outstanding company. I would love to buy more shares. I have a nice amount of shares now, so I'm not buying at this level unless there's a pullback to around $20 to $18. Then I'll purchase more shares. But overall, great solid company. If you already own it, kudos to you. If not, look into this stock, high yield. You know, even if it just stays flat, you're collecting 8%, which is outstanding. But overall, solid company. Thank you for watching. If you enjoyed this video, hit the like button, and I'll see you guys in the next one.